Problem 16-38, Statement of Cash Flows with Free Cash Flow. The 2025 income statement and comparative balance sheet of Jason Inc. follow. So we can view the income statement, the additional information, and pop open the requirements that show up here. And then we also have a balance sheet, of course. So for requirement 1, we have prepare the 2025 statement of cash flows, formatting operating activities by the indirect method. Use a minus sign or parentheses for amounts that result in a decrease in cash. If an input field is not used in the statement, leave the field empty. Do not select a label or enter a 0. This should be getting a little easier. We've done a few of these statement of cash flows by now. But just as a reminder, in operating activities section, we're going to start with net income. Then we're going to back out depreciation and back out gains and losses. So our net income can be found here in the income statement at the very bottom. We have a net income of 99,500, so we can go and copy paste that into the first cell here. And then under adjustments to reconcile net income to net cash provided by operating activities, historically the first thing is depreciation expense. So we can find that here also in the income statement, but we'll input the title here first. So depreciation expense, plant assets. And then we have that expense right here of 14,500. We're going to go ahead and copy and paste that over as a positive number. And we back out this depreciation because it does not lower cash, but it does reduce net income. So we have to back it out by adding it back in, since it is an expense and lowered net income. And next we have our gains and losses, and then looking through here, we don't see any gains and losses. And that's also, of course, checking the additional information here. So after gains and losses, we're going to analyze changes in current assets and then analyze changes in current liabilities. And if you notice the arrows, if a current asset goes down, the cash must have gone up. So the arrows are opposite for current assets. So let's analyze our current assets. So in order to do that, we're going to open up our comparative balance sheet and stick it right here. So technically the first current asset is cash, but that's going to go to the bottom of the statement of cash flows. So next up we have AR. What do we have going on with AR? It looks like our AR went up. So you'll notice it went from 25,300 to 26,500, which is a $1,200 difference. So we have an increase in accounts receivable, AR, and that is going to be a positive or a negative 1,200. Well, if we take a look at our handy cheat sheet, it appears that an increase in AR is a decrease in cash since we are not collecting cash on AR. The other way you could look at that is if our AR decreased, we would be receiving cash, so our cash would be going up. In this case, we are not receiving it. Our AR is just increasing. So that is going to be a negative 1,200. So then our next current asset is merchandise inventory. What happened here? So it looks like we started with 91,900 in 2024, and then it decreased to 79,900. And so that difference there is a $12,000 difference. So will that merchandise inventory decrease be positive or negative in our operating activities? Let's have a look. So decrease in merchandise inventory. And then with this one, it is going to be a positive 12,000. Because in order for it to decrease, we must have sold some inventory. So that means an increase in cash. And then next up, we have our liabilities. So we moved on to these current liabilities here. So we'll take a look and start with accounts payable, AP. So with AP, it looks like we went from $30,500 to $35,600. So that is an increase in accounts payable. So we can go ahead and input that here, increase in accounts payable. So if our debt for accounts payable went up, we must have received some cash for it. So this is going to be then a positive $5,100 difference here. So we'll go ahead and input positive 5,100 and move on to our accrued liabilities. So it appears here that with our accrued liabilities, they did the opposite. They went down. So from 30,600 to 28,900. And that is a $1,700 difference. And since some of this debt went away, it must have meant that we paid cash. So cash is decreasing by 1,700. So this is again a decrease in accrued liabilities. And then that's going to be a negative 1,700 because again, in order for our liabilities to lessen, in this case here, cash must have come out of our account in order to pay for this. Okay, and then next up, that concludes our operating activities right here. So we can go ahead and add these numbers up for a total of 28,700. And then we'll go ahead and add net income to this 28,700 for 128,200. So this means then we have a positive cash flow from operating activities of 128,200. So let's go ahead and check our answer. Excellent. Okay. Then we are moving on to cash flows from investing activities. So what goes in the investing activities section? It is changes to long-term assets. So I'll go ahead and open our comparative balance sheet to take a look at these long-term assets and their changes, and then also our additional information, because here it notes that there was some changes to our assets. So it looks like we purchased land, but we financed it with long-term notes payable, which is going to be in the fourth section of our statement of cash flows. But then in the last part here, it reads, a plant asset was disposed of for $0. The cost and accumulated depreciation of the disposed asset was $12,060. The plant acquisition was for cash. So again, that is going to end up here in our investing activities, but we have to do a little bit of math. So we know we're going to be getting cash payment for acquisition of plant assets, but we need to figure out what that amount's going to be. So we know the beginning and ending balance, and then of course the cost for the disposed plant asset there. So we know what our beginning and ending balance for plant assets is given to us here on the balance sheet. We also know what the disposal is here for that 12,060. So now we're looking for this mystery number here, the acquisitions. So in order to get this number, so we'll need to take our beginning balance of 108,840, subtract out those disposals of 12,060, and then we need to figure out what number then will bring us to 123,480 as the ending balance to calculate those acquisitions. So that number is going to end up being 26,700. And again, is that number going to be positive or negative? It's going to be negative 26,700, and that is because we are paying cash. So it's cash payment for acquisition of plant assets. So that's the only thing that's going to be going here in our investing activity. So we can go ahead and bring that same negative 26,700 to the very bottom of our investing activities. And then we can go ahead and check our answer. Nice work. So when we scroll down, next up we have cash flows from financing activities. Our last section, financing. Hopefully you remember that this is affected by changes in long-term liabilities and owner's equity. So again, we're going to go back up here and look for changes in long-term liabilities or changes in equity. So we can check our additional information here. And then also, since we are dealing with the long-term liabilities and equity, that is going to be on the balance sheet. Go ahead and move that over and scroll down. So outright nothing sticks out to us, but the tricky part about this problem is we have to calculate the dividends paid to the shareholders, since you'll notice that there is a difference in retained earnings and there was a net income, so we will have to calculate that. So we can close out of this here. It just gives us additional information again that there was no retirements of stock and no treasury stock transactions. So let's go ahead and close out of this one. I won't be needing that. So for the account that we're working on, we're going to go ahead and input cash payment of dividends. And again, we're going to go ahead and calculate that. In previous versions of this problem, in different editions, they actually gave us this number, so this is a little bit new. But let me walk you through it. So the formula for the dividends paid is the beginning retained earnings, which is 6,100, plus the net income, which is 99,500, and then we subtract the ending retained earnings, which is 41,800. And that number is going to give us a total of 63,800 dividends paid. And since that number is cash being paid, is going to be negative. So let's go ahead and input 63,800 negative because it is cash going out. So next we are going to have cash payment of notes payable. Go ahead and input that account here, and then I will walk you through how to do this. So in order to view the information again, go ahead and click on View Additional Information. So at the top here it says, additionally, Jason Inc. purchased land of $24,500 by financing it with 100% with long-term notes payable during 2025. So what we're going to want to do here to get this cash payment of notes payable, we're going to take the beginning notes payable balance of 103,000, and then we are going to add non-cash borrowing to finance acquisition of land. So that's that 24,500 that we're adding. And then we subtract ending notes payable balance. So that is that 77,000 given to us over here. So that is going to give us our total cash payments on notes payable, and that number is 50,500. And again, since it is a cash payment of notes payable going out, the cash is going down. So this number is going to go ahead and be negative. So 50,500. And then last but not least here, we have to take a look at our common stock. So we have to account for the change in the value here. So we'll go ahead and put cash receipt from issuance of common stock, because again, this number here is increasing, so we are issuing stock. And then go ahead and input that here. So cash receipt from issuance of common stock. And since we are getting cash for issuing this stock, that number is going to be a positive 23,900. And again, that's the difference here between last year and this year. So that 23,900. And then we can go ahead and add these up, and we will get a negative 90,400. And since this is a negative 90,400, this is net cash used for financing activities, because again, we spent more than we made here by issuing that common stock. So Let's go ahead and check our answer. Well done. Okay, and we are not actually quite done, so we'll scroll down. We have net increase, decrease in cash, so that one is easy. So we'll scroll back up to the top of our balance sheet, and then we're going to grab the difference in cash here. So it looks like we have more cash than in 2025, so that's an increase in cash. And that amount is going to be 11,100. So that is positive because cash is increasing. And then the easy part here is we can go ahead and copy and paste these numbers in here. So cash balance of December 31st, 2024. We can go ahead and copy and paste because that is given to us here. And copy and paste. And let's go ahead and check our answer now. Well done. Okay. And there is more. So we have the non-cash investing and financing activities. So again, remember when we go back to the additional information, we purchased that land with that 24,500 with that long-term notes payable. So that is end up going down here. So we are having acquisition of land by issuing long-term notes payable, and that amount is 24,500, and that is positive. And that's the only one in that non-cash investing and financing activities. You can go ahead and put down 24,500 there. So we can go ahead and check our answer. Nice work. Okay. And then before we move on to that last question, I just wanted to review here. So it appears this company is making the most out of its operating section here, out of its operating activities, I should say. And then investing and financing activities are drawing a negative here. So that means we are spending in investing and financing activities. So now when we come back down to requirement 2, how will what you learned in this problem help you evaluate an investment? So we have A, learned how operating activities, investing activities, and financing activities generate cash receipts and cash payments. B, learn how to predict future cash flows, evaluate management decisions, and predict the ability of the company to pay off its debts and dividends. And we have C, both A and B, and D, none of the above. So for this one, the answer is C, both A and B. Let's go ahead and check our answer. Well done.